Yeah, Rick Santelli standing by at the CME in Chicago. Could anything change? Could we have a whole new view on everything based on imports today, Rick? Probably not, right?
No, it's hard to tell. These numbers the last couple of days, the most interesting feature about them, CPI and PPI, is the market response. We could spend a lot of time digging into data and looking at how strange some of it is, but the market divined it real well. Here we go. It's hitting the wires. Retail sales, this is for the month of July. It's the advance. It's going to change in a couple weeks. Headline number expected up 0.6, comes in darn close, up 0.5%. Up 0.5% compares pretty good with the up 0.6 in the rearview mirror, which hasn't been revised yet. And the up 0.6 was the second best number of the year. 1.5 is the high water mark in March of this year. If we strip out autos, it actually still retains a good chunk of that growth. Up 0.3, and that's exactly as expected. It follows up 0.5. Don't see revisions yet. Ex autos and gas, it holds up okay. It's losing a little bit of steam, up 0.2. Now 0.2 ex autos and gas. That would be the lightest since it was unchanged in May. So not bad numbers. Revisions starting to come in. I'll get to those momentarily. The core retail sales or control group coming in at nice 0.5%. Better than expected. 0.5% is what the rearview mirror was, but we'll get to revisions in a second. Here we go on the revisions. So the numbers are pretty good with respect to the advanced July. Look at the rearview mirror. Headline now moves from 0.6 to 0.9. Ex autos from 0.5% to up 0.8. Ex autos and gas from up 0.6 to up 0.8. And that control number moves all the way up to 0.8 from up 0.5%. These are solid growth numbers. Now, let's go to import prices, shall we? Import prices, these are all July. If we look at the headline number, up 0.4. Okay, Joe, that's definitely warmer than expected. Up 0.4. Well, that would be the high water mark of the year. That would be the high water mark going all the way back to tax time of 2024. April of 2024. So we see import prices under a bit of pressure. If we strip out petroleum, they're still on the high side, up 0.3. Up 0.3 equals the high water mark of the year in April. And you're going back to April of last year to find a higher level at up 0.6. Now, if we take a year-over-year perspective, those were month-over-month. Year-over-year perspective on import prices, down 0.2, down 0.2, which means 1, 2, 3. This is the third down 0.2 in a row. Okay, switch gears to export prices. Export prices up 0.1 on a month-over-month headline. On a year-over-year, they are up 2.2 year-over-year, up 2.2. Where does that comp? Well, May was 1.9. Last month was 2.6. Fits right in there. We are seeing some revisions on some of these import-export prices. They're going negative. So we see minus 0.1 now on import price month-over-month. That was originally up 0.1. We have one category left, folks. Empire Manufacturing comes in powerful. 11.9, we're expecting unchanged. 11.9 would be the second highest of the year outside of March when it was 20. The market divines all this better than any single human can. Interest rates have moved up a bit. We were at 4.29 and a 10. Now we're at 4.30. How does 4.30 compare? 4.30's up 2 on the session. It's up 3 on the week. And we want to pay very close attention to what's going on in the pre-opening equities. They haven't been phased much. Still a powerful opening expected in the Dow Jones Industrial Average. Joe and the gang, back to you.